welcome to a special Mad Money from One Market in San Francisco. Welcome to Cramerica. Other people, my friends, I'm just trying to make you some money. My job is not just to entertain, but to educate you. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. Time to pardon Jay Powell. The poor guy's not a criminal. He doesn't belong in prison. I know you laugh, but today we learned that the Justice Department has launched a criminal investigation of Powell for something he said in Congress about the renovation of the Federal Reserve headquarters, which is coming in over budget. Of course, Powell says that the president's doing this because the Fed isn't cutting interest rates fast enough. The Justice Department will never admit that. But I think Powell's got a point. While I'm not a fan of politically motivated prosecutions, at least Trump takes monetary policy seriously. If you're going to play games with the Justice Department, I can think of worse reasons than getting interest rates lower for the American people. If this is such a big deal, though, how come the stock market barely seemed to react? Dow gaining 86 points, S&P advancing 0.16%, NASDAQ climbed 0.26%. Oh, it's simple. This is Wall Street betting that it's not going to happen. Even some Republican senators are pushing back against the Jay Powell prosecution. Besides, what's the point of going after this guy whose term ends in 4 months? And how often do you go after the customer when it's the contractor that runs over budget? Again, I'm with Powell here. But I got to say this about President Trump. Usually when he does something that could terrify the markets, he changes his mind. Wall Street freaked out last April when the initial Liberation Day tariff rates were announced. But then most of those tariffs ended up coming in at much, much lower levels. This time, money managers are betting that Trump won't follow through because they think following through would be nuts and very bad for stocks, which we know from post-Liberation Day, Trump doesn't want to happen. However, I still want a presidential pardon for Jay Powell because, as any lawyer will tell you, a grand jury would indict a ham sandwich. You don't want to end up with a situation where the Fed chief actually gets prosecuted because that would end the very idea of Fed independence or Justice Department independence for that matter. Still, nobody believes the Justice Department will actually go that far. This isn't the only news about presidential intervention in the economy that the market seems to be ignoring. President Trump has also decided that credit card companies will have to cap rates at 10% for a year. Okay, of course, Congress would need to pass actual legislation to make that happen. But I'm sure the president will be happy to call in the heads of the banks and try to browbeat them into following his orders. This is another where Wall Street just doesn't seem to care because it's too over the top. Because the bank stocks actually opened down and spent the rest of the day rallying. If we actually cap credit card interest rates at 10%, the real victims would probably be the millions of Americans who no longer be able to borrow money. Some people are bad credit risks, and these companies simply won't lend to any of them unless they can get exorbitant interest rates. I don't want to be the bull who cried bear, but you'd just be mandating a crash if these companies stopped lending. Better simply print a lot of money. Here's the bottom line. The market's a harsh taskmaster. If it thinks you can be outflanked and outsmarted, it's not going to do your bidding. And that's what happened today. The market just doesn't believe Jay Powell will be prosecuted or the credit card companies will get hit with an interest rate cap. I'm betting the market's right. Let's take some calls. Let's go to Andy in New York. Andy.
Hi, Jim.
Andy, what's up?
Thank you for taking my call. Okay,
my pleasure.
Thank you for taking my call. I would like your opinion on ticker symbol SHOP, Shopify.
All right. Now, Shopify, lately under a little pressure. Look, I think it's wrong. To me, Shopify is a buy, and today's actual rally is the right way to go. I'd go with that rally. Shopify goes higher. Today, we saw the market being a harsh taskmaster. If it thinks you can be outsmarted, it's not going to do your bidding. Mad Money tonight. I'm kicking off our coverage of the J.P. Morgan Healthcare Conference with conversations with some of the biggest names in the space, including exclusives with Novo Nordisk, Medtronic, Pfizer, and Bausch & Lomb. You're not going to want to miss any of it, so stay with Cramer.
Don't miss a second of Mad Money. Follow at Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Novo Nordisk, the company behind Ozempic and Wegovy, just launched a pill version of the revolutionary weight loss and diabetes drug. So while we're out here in San Francisco for the JP Morgan Healthcare Conference, we took the chance to check in with Mike Dustar. He's the new president and CEO of Novo Nordisk itself. Take a look. Mike, it's great to have you on the show.
Thank you so much.
All right, let's go for what everyone has wanted. No one likes to give themselves an injection. You've got a pill for GLP. What's it like? How's the business going?
It's going very well. First of all, I have to correct you, and there are a lot of people that like injections, but you're probably right.
Who likes?
Well, we have, around 10, 15 million people right now on GLP-1 together with our competitor. So that's going well. But I think you have a point that there are a good group of people that basically have been waiting for the pill. After all, injection does come with injection phobia, needle phobia. It comes with taboo, societal taboo. And also it comes with the burden of refrigeration, which our pill does not have.
When someone opens your refrigerator, they want to see a beer. They don't want to see a needle.
That's true. I think we are seeing actually that the pill is able to expand the market.
Yes.
For a large group of people that have been waiting. Predominantly, I would say the major barrier has been the taboo. If I take a pill today, you will not notice anything, and then you just let it go by. If I pull up my shirt and inject myself in front of you, you start thinking about me. And a lot of people have been, of course, waiting to get rid of this taboo. But the refrigeration is an issue, and I would say it's an issue especially for many of the markets. Now in US, of course, it's probably better, but in many markets where refrigeration simply doesn't exist, not necessarily in people's homes, but imagine the cold chains that you need to move the product from A to B.
And people don't know whether it's good or bad.
That's also true. So we are super excited.
Well, you should be. One of the things that I know that a competitor has told me over and over again is there is a belief after 13, 14 months, they didn't want to take the shot anymore. There wouldn't be any fatigue if it was a pill.
Well, we have to wait and see. I actually have come across a number of people that have started the injection and have said that once a week injection, let's say on a Saturday at home, is what they prefer compared to a daily pill. But I also have come across people in my own family that have said any day, every day, single pill is better than any type of an injection. So I think the truth about obesity is that we treat it as one group of people right now. We say 2 billion people have obesity. The unfortunate fact is that this is a multiple diseases with different needs, different types of people, and you have to have the product offering that caters for all, which is what my company is about to do.
Mike, I am glad you're there because saying that, because tell me, I'm going to mention some illnesses. You tell me whether it could work. Hypertension.
Absolutely. I think that, one of the things that, of course, we take a look at many of our drugs is it supporting and helping hypertension. I actually think it goes beyond hypertension. If you think about obesity as a disease, unfortunately, you don't die from obesity. You die from issues related to obesity, hypertension being one, high lipid, cardiovascular issues, kidney issues, liver, fatty liver. So,
which for people should know, alcoholism can produce a fatty liver.
Absolutely, absolutely. And one of the things that we are really proud about this Wegovy pill is that, as the name says, it's a Wegovy. So it's not only reducing your weight, actually at the same level, 16.6% as the injectable version of Wegovy, which is quite unusual, and we can discuss that a little bit later. But it also comes with a label that shows you the CV benefits, the cardiovascular benefits, because it's the same molecule, semaglutide. So I'm very happy that today, when you take one of these pills, you're not only supporting and helping your weight management, but you're also getting into some of the comorbidities that is associated with obesity.
And we knew when we first heard this that people said it'll always cost, say, $1,000 a month, and therefore it would break the bank of whatever country, including ours, supported it. That turned out to be totally untrue. $149. So, which is a learning we have had that if you want to really make this accessible, then you have to put it at a price where everyone can afford it.
And
it's something that the president and you both agree on.
We have actually, and I think that it has been a good learning that negotiation with the MFN opened up everyone's side. That we have to. I mentioned 15 million people or so are on GLP-1 in this market. There are 100 million people with obesity in US. Very few people talk about, what about the other 85 million? Everyone talks about, is Novo winning versus Lilly, who's changed,
right.
and the compounders that have 1 million patients over here. I think the unmet need is actually about the people who are not having their products. And a lot of those people are not getting their hands on these products, not because they don't want to, because they couldn't afford it.
Okay, well, let's talk about the compounders. We know their organizations. I see their ads. A fraction of the cost. Should I trust some compounder that really hasn't been approved by the FDA making a pill for me?
They're knockoff products. So this should be completely illegal. And I'm very surprised that in this country, this is still legal. It shouldn't happen. This is something that happens typically, I wouldn't want to say Banana Republic, but it should really happen in emerging markets sometimes, where you close your eyes and let it go by. But in US, to have products that come into the market with API from China that is not gone through rigorous testing of FDA is just a safety issue. Forget about the business side of it. I would not want to give this to anyone I love. And unfortunately, this is still continuing. And we will continue to actually talk about it and fight it.
Okay, now, there are some people who say, wait a second, this pill isn't as effective as an injection.
That's absolutely wrong. If they're talking about Wegovy pill,
Okay.
I think there is an element that pills are usually chemical entities. They're small molecules, and when you actually take a pill, it comes with the compromise that its counter-injectable part then is more efficacious at the burden of injections. Wegovy pill is a biologics. This is a protein and peptide, and I think when he actually decided to encapsulate this protein with a special mechanism that it can bypass your gut enzymes and get to your bloodstream, most people thought this is just scientifically not possible.
Okay.
But we went through it and we did it, and I'm so happy that we succeeded, because as a result now, you have a pill or a pen,
Right.
both of which reduce your weight by 16.6%. So you don't need to compromise anymore.
Okay, so tell me, Mike, what happened? You had a firm lead in this, and then Lilly passed you. What occurred?
Yeah, I think what typically happened is the world started to think that we came to this business 30 years ago.
Right, when people felt diet and exercise was the key.
Absolutely, and when we went there, Jim, most of our peers, if not all of our peers, made fun of us. They actually, I remember many of our peers telling us, why are you guys going there? There's no money in it. And our company, and I'm of course a little bit subjective here, our company went there because we saw the patients. Obesity is a very visible disease. We saw the patients, and we also noticed that these patients are typically those who are later on suffering from type 2 diabetes. And as we were in that business, we had to go there. But as we went, of course, there, we had to learn that obesity in some ways, from a patient point of view, very different than diabetes. Right. When a follower comes after you, they learn about your mistakes and they adapt some of those, and they benefit. And I think, I have to give it to Lilly, they've done well, but they also had the pleasure of seeing some of our mistakes and fixing those as they go along.
Okay, they've been fixed and you've been instrumental in doing that. Tell us once again, if someone wants to get the cheapest version, what do they pay and where do they get it?
Well, if you have a copay and your insurance company agrees to your prescription being dispensed, then it's $25.
$25 for something that was $1,300 2 years ago.
With insurance,
$1,300 a month.
That's true. $25 if you have insurance. Now, if because of pre-authorizations and or any obstacle that the insurance company puts upon you, you cannot go that route and you want to go through the e-health providers,
right.
It could be through NovoCare Pharmacy,
right.
our own pharmacy, or through some of our partners, Weight Watchers, Roe, LifeMD, Costco. Then the price for the initial dose is at $149. And then it basically goes to $199 and eventually to $249.
Still incredible. Now, I do not want to it's wrong to slight your rare disease efforts. You've got some really good things. But also sickle cell, which is proven to be impossible. It may not be.
Correct.
What have you got?
I think most people, of course, forget about our efforts in rare diseases because we're so predominantly known for diabetes and obesity. But we have some fantastic new launches coming up. We have, of course, the sickle cell drug that you mentioned, Etavo. We also have something called MIME-8, which is stopping the bleeding for hemophilias better than anything else. 98% of the bleedings that were tested in the clinical trials were basically
I remember when it was
stopped.
70%.
So this is fantastic, and we're looking very much forward towards the end of this year to introduce some of these drugs.
Excellent. I want to thank Mike Hustar. He's the president and CEO of Novo Nordisk. Once again, $25.
$25 if you have insurance.
Incredible. Thank you very much.
Thank you so much.
Coming up, can Medtronic continue to build on its productive 2025 gains? Cramer's asking the CEO how the medical tech giant will keep advancing in 2026. Next.
The stock of Medtronic, the medical device maker, finished 2025 up more than 20%, in part because it plans to spin off its diabetes unit as an independent company. Today, they just got FDA approval for their new smart glucose pen system. At the JP Morgan Healthcare Conference, I got a chance to catch up with Jeff Martha. He is the chairman and CEO of Medtronic. Take a look. Jeff, welcome back to Mad Money.
Thanks, Jim. It's good to be here.
So I remember what you said at this conference last year. You promised a couple of things. Some people might say, well, please, they can't get it done. Renal denervation, who would actually pay for that? You talked about, well, you mentioned that you were going to fix the diabetes business. Well, you're going to spin it off. That's obviously the right thing to do. I read all these things and I think maybe you're going to have better than expected earnings.
Well, look, first of all, Jim, thanks for having me.
Sure.
It's good to be back at the conference this year. We're super excited because a lot of the things we talked about last year are all coming into place now and very tangible. And we're really excited to be talking about these generational growth drivers for the company.
I want to go first to colonoscopy just because so many people are concerned about it. You talked about AI and how it might be able to catch much more than what is done now. The standard of care is rapidly going toward you.
Right. Yeah. Becoming an AI-assisted colonoscopy is rapidly becoming the standard of care. We did a clinical trial on this a few years ago, and we found that the GI docs were missing roughly 26% of the polyps in the trial. But now that we've launched it out in the real world and it's gone, much more scaled, we're finding that they're missing up to 50%. They're doing 10 colonoscopies a day. Their eyes get tired. And plus these polyps are hard to pick up. So the AI has been a home run for this diagnostic.
People are adopting that, and it's done quickly. I know that many of the hospital systems in New York immediately switched to you. Hugo, another thing you promised.
Right.
There's a more entrenched system, the intuitive surgical. Talk about, please, why hospitals should go with Hugo over ISRG.
So first of all, Hugo has been something we've been working on for quite a while. Just got FDA approval in December. So it's new. And what this does, it's the first real competitive offering to Intuitive, right? And there's a number of features about our robot, our system, that physicians are excited about. The modularity, so it allows you to move it. You don't need a dedicated room. Allows you to move it around. The display it allows for more situational awareness in the OR for the physician. There's a number of other
cost per procedure seems lower.
Cost per procedure. So there's a number of technology features, but also the partnership approach we can take now. That's the second thing. Is hospitals traditionally have purchased their soft tissue surgery technology by picking a vendor that cuts across their diverse needs, open procedures and laparoscopic, and now robotic assisted surgery. Medtronic is the only one that can serve all those needs and contract across all three in the U.S.
Once again, save the system money, which is something you told me is very important and one of your goals.
Right. The other thing about our system is, like I said, we don't need that dedicated room, but also the tower that powers the system can be used for both the robot as well as laparoscopic surgery. And there's still, the majority of surgery is still laparoscopic.
It looks like cardiac ablation, the pulse field ablation that you said would be there and be good, I think is taking share.
It is. We grew 70% last quarter, and we're now the fastest growing technology in that fast growing space. And we believe we're marching towards market leadership.
Well, I should stop there and say that would mean a lot for earnings per share. That is the most important area in terms of getting accelerated revenue growth.
Yes, it's like I said, huge market, fast growing, and for us, it's immediately been accretive to our operating margins. And over time, as we switch to selling less capital equipment and more catheters, it's that razor blade model.
Yes.
And as we get more of those systems out there and we're selling more catheters, you're going to see it impact positively our gross margin as well.
What's the resistance of doctors? I mean, some of these people have just been using the same systems over and over again. Why would they switch to you?
Well, there hasn't been a lot of resistance, honestly. This move from the radio frequency technology that has been the standard to pulse field ablation has been as rapid as we've seen in medtech ever. It's been a huge, people are talking about when you go back to going from bare metal stents to drug-coated stents. It's been a fast movement to us and our main competitor. And because it's faster, it's safer, and it's highly effective, and you've got a huge patient pool.
Now, Elliott Partners took a stake. Sometimes they're tough in the sense that they want real things right now. I don't know whether they couldn't agree pretty much with your whole game plan once they got in.
Well, look, their words, not mine. They came in with the thesis that we were at an inflection point in the company's history with all this innovation coming. And the relationship's been constructive, productive, and they've been a good investor.
Well, did they agree with the idea that maybe diabetes, it's just a tough field? I know Insulet's got a good business right there, MiniMed, good product, but maybe didn't fit in.
Yeah, it's more of a consumer business than the rest of Medtronic. We tend to sell to hospitals.
I know business to business is a lot more effective than business to consumer.
And so that being said, our diabetes business, MiniMed, is a great business. And the reason we did it now, the reason we did it was the consumer versus business to business. The reason now is because the innovation they have right now is the best in the company's history. It's a complete ecosystem of sensors, insulin delivery devices, and the best algorithm out there for insulin-dependent patients.
Do people ever say, you know what, the consumer, if they knew about Hugo, if they knew about your cardiac ablation and how well it's doing, they'll ask for it? Or is it just really about the hospital, and you're never going to get the consumer to say, I don't want Intuitive, I want Hugo?
So look, there are several segments in medtech. Diabetes is more of a true consumer business, but in that business-to-business medtech, where you're going to see medtech companies, including Medtronic, drive consumer awareness. Hypertension is a big one.
Right. And we have to talk about that because your method is obviously superior to those who won't take the pills.
Right.
Talk about adoption.
So look, it's a brand. So let's take a step back on hypertension.
Sure.
18 million people in the U.S. suffer from hypertension. 75% of those are uncontrolled.
Silent killer.
Right? 50% of these patients quit the meds in 1 year. So the current standard care meds just doesn't work. So you have this new-to-world therapy, right? No one really knows about it yet. And so doctors understand it. We've been studying it for 10 years. It's probably the most studied procedure at launch of anything in medtech. And it's highly effective and it's safe. So now we got to get the word out to consumers. And our brand is Simplicity, the Simplicity blood pressure procedure.
Right.
Our intention is to make Simplicity synonymous with hypertension management going forward.
Now, how about payment? Because that was something I was worried about.
Yeah.
The authorities, they're willing to pay.
Yep, we just got the national coverage decision by Medicare.
Which you told me you could get,
Yep.
and I was highly dubious, if only just because it's such a radical procedure.
All right. Well, radical in that it's new, but it's easy and safe. It's not radical that way.
Well, we have a medical establishment that frankly is entrenched, and we have pills, and I wish everyone took the pills, but they don't.
They don't. And kudos to CMS here that understood that, and FDA. FDA gave us a breakthrough designation. CMS came in with a broad national coverage decision for Medicare patients, and now you're seeing the commercial payers follow suit.
And you haven't had any interaction with the Health and Human Services at Robert Kennedy. You're not involved with any of the areas, he seems, that are strong to him personally.
No, not directly. We've worked collaboratively with Dr. Oz and his team at CMS. And of course, FDA we're working with constantly, but not directly with the Secretary.
All right. Well, congratulations on fulfilling everything you said at this conference last year.
Hey.
Not everybody did that. Jeff Martha, Medtronic Chairman and CEO. Thank you, Jeff.
Thank you, Jim.
Coming up, will 2026 be the year Pfizer breaks out of its rut? CEO Albert Bourla is joining Cramer to break down what's coming down the company's pipeline. Next.
What's it going to take to get Pfizer moving higher again? After years of underperformance, is it too cheap to ignore now? At the JP Morgan Healthcare Conference, I sat down with Dr. Albert Bourla, the chairman and CEO of Pfizer, to examine the company, its pipeline, and its high yield. Take a look. Albert, the most exciting thing, I'm going to get right to it, is weight loss. And you have decided you must be in there no matter what.
And not only to be there, but we decided that we should be a leading company into that. And I say that with not at all arrogance, because I know that the leader right now is a wonderful company, they have a wonderful pipeline, and their CEO is fantastic, but we are Pfizer. So we are go all in. We are going to start 10 phase 3 studies this year, 10 phase 3 studies.
Well, Metsera, tell me what it's done for you.
Oh, it is. We are expecting now data from the monthly dosing, and that I hope in the first half of this year we will release, and we hope to demonstrate how highly differentiated the ultra long-acting GLP-1 it is compared to the long-acting GLP-1s of the others.
And how long is ultra long?
It is a month. So we are going to have data probably for at least 4 months of people being on monthly.
How much, and this is injection or pill?
It is an injection, but there is a pill also that is following.
Okay, now, the reason I bring it up immediately is that I remember when Merck had Mevacor, a tremendous drug, cholesterol, but they weren't the winner. In the end, Pfizer was the winner. It can happen like that, correct?
Of course it can happen like that, and we have stories like that in multiple therapeutic areas. Pfizer is a powerhouse of executing and of commercial. And with a portfolio like that, I think we will be able to play a very significant role.
All right. Well, the reason I wanted to start there is because the loss of exclusivity that you have, $1.5 billion in 2026, doubles in 2027, doubles again in 2028. It makes me feel, wait a second, as a conservative investor, I can't trust your dividend.
Yeah. Actually, I can tell you that you should not worry about the dividend. And you need to know that we were preparing for this period, 26, 27, 28. We did all these acquisitions. Basically, all the proceeds from COVID and much more were invested, 80% in 3 companies. Biohaven with Nurtec, Seagen, and Metsera now.
All right, well,
and
look,
all 3 are doing phenomenally well.
Well, hold on. Let's check that. Seagen has not been phenomenal. I don't know how you can say that for $43 billion expense. I've known you for a long time. I think you have to be a little more conservative about what you've seen and what you've gotten.
Seagen, we said that we were going to make $10 billion by year 2030, and we will. I can tell you that. Right now, the Seagen sales of the current portfolio are moving well ahead of our expectations when we did the deal. But also the pipeline is moving. For example, this year, we are expecting the readout of the new generation of Seagen that goes against lung cancer. That's a $60 billion market. If this study is positive, watch the portfolio.
But I remember Seagen from the old Seattle Genetics, and I thought it would be brain, I thought it would be kidney, I thought it would be liver. They made expectations that, and those weren't yours, but they made expectations that made me think that $43 billion was cheap. And then once you got them, I'm concerned that there are not enough indications.
Actually, as we had discussed multiple times, expensive or cheap depends in our business if it is successful or not. If the products will be successful or if the products will fail the studies. If the products succeed, we paid very little for this company.
And
if the paid failed, we paid a lot.
Right, and that's what I'm worried about. Look, the reason why I'm concerned about the dividend is there are many people who are watching. They get 6.7%. They are saying, you know what, this is a bond. I had a caller who said it's a bond. It's not a bond, it's a common stock.
Yeah. And I think that they should not worry at all about the dividend.
It's a strong statement.
That's why I'm saying I'm the CEO and chairman, and I say you should not worry about the dividend.
Okay, fair enough, and take your face value. Now, you spent $11 billion for Nurtec. Are you able to get money back beyond just the simple migraine?
Look, it's not just a simple migraine. Right now, the product, first of all, is doing extremely well in migraine. But we are having a study right now that we expect to read out probably next year, maybe end of this year, but probably next year, on menstrual migraines. This is a huge problem with women, and we hope that new indications will take the product to a new level. And also, we are starting a study this year for a chronic prevention. Chronic migraine means at least 15 episodes per month, migraine episodes.
Well, I have 20, I had 26 a month before anything this, and I can tell you it worked. I just don't know if it works for everybody else. And by the way, the awareness is subpar.
Yeah. The study will show if it works for everybody else, and the awareness can become better, but this one will be daily use so that you will not have migraines.
Okay, fair enough. I like that. Now, most favored nation. Good for all of us. Most favored nation. What was it like to be able to negotiate with the president to be able to basically bring down your margins?
Yes, I think we found a very, very good way to resolve a major uncertainty. It was not only the MFN, it was the tariffs, and those were creating an overhang over the entire industry. Right. And I'm proud that Pfizer led the way, and now all 17 companies have signed contracts with the administration. I think the genie was out of the bottle. We couldn't have prices in the US for products that are 2 or 3 times higher than in Europe. So that is changing and will change. Europe needs to pay their fair share of innovation.
Okay.
And Japan and Canada.
Fair enough. When I think of Pfizer, I think of vaccines. I think of life-saving vaccines. I think of vaccines that would make it so I don't even know what the world would look like without them. The Secretary of Health and Human Services does not agree with that. I think that he would say that many of your vaccines are not legitimate. What do you say to him?
Look, I tried to maintain, and I was successful, to maintain a very good working relations with Bobby Kennedy, with the Secretary. And actually, the MFN agreement is a testament to that. But in vaccines, it's an abyssus that is dividing us. The gap is huge. Everything they do, it is not science-based, will cost lives. These are not things that are easy they are not, let's say, not trivial. And I can tell you, and I'd say that although the changes in the schedule didn't affect Pfizer.
Dr.
Right?
Boyle, do you not fear retribution for your stand, which is directly opposed to HHS?
No, I don't think so. Because as I said, we maintain open dialogues and open ways of communication. CDC, I don't agree at all. Many other things that they are doing, I agree. The MFN deals, we did it together.
Fair enough. Now, your CFO has said, I'm going to just quote him, you won't return to growth until you hit the end of the decade. Is that true? No growth till the end of the decade? Why do you say that?
No, it's not true in that way. What is going to be, it is that we will have stagnation and probably small decline all the way to 28. Following that, 29, 30, 31, 32, the CAGR of that period will be industry leading. The compound annual growth will be industry leading. I know what I'm saying when I say industry leading. I know what are the projections for every other company. And in our calculations, we will be leading the growth of the industry, 29, 30, 31, 32.
Okay, so Merck has been able to address directly the LOE, the loss of exclusivity. Why has Pfizer not been able to right now make it so that 2027 is a year that it wouldn't be down? Because
Merck has we have 3 years of loss of exclusivity. Right. We just ended with $1.5 billion. We go next year with $4.5 and then $6.5. And it's going to cost us those 3 years, the numbers that I just told you.
But you did a tremendous amount of money that came in for COVID. You weren't able to make it so that you could just buy that growth?
We did buy the growth. And right now,
well,
if you see...
Maybe not fast enough.
Well, I would say that probably fast enough. Right now, our LOEs are expected to be 18 billion, 17 billion in year 2028. This year, probably will make 10 billions from new acquisitions and new launches with double-digit growth. Okay. I can tell you now that next year, so this year, 26, we will maintain the double-digit growth.
Okay, then what I'm going to say when someone calls in on Pfizer, my lightning round, I'm going to say, I am not concerned about the dividend. I spoke directly to Dr. Albert Bourla, and he assured, can I say that?
Yes.
Then I will. Albert Bourla is the chairman and CEO of Pfizer, PFE. Thank you.
Thank you very much. Happy New Year.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
It is time for the White Rock. Ralph Roll, same as stock that by myself, still just another 4 stock present time. My staff prepares the graphics. Plan this out. And then the lightning round is over. Are you ready? Ski Daddy from the lightning round. Chris Sort of Lance in Maryland. Lance.
Thank you for taking my call, Mr. Cramer. With a PE of 24 and a dividend of 5.7, is it smart to start a position in self-storage company CubeSmart?
Not enough growth, and there are others that are better. Let's stick with Prologis. Okay, that's the best. Let's go to Julian in Virginia. Julian.
Hey, how you doing, Jim?
Couldn't be better. What's going on?
Hey, I have a question for you. Like, it's a Sony like a goodbye?
Yeah, down $1. Yeah, down 1.5%. I think for the year. Yes, I'm going to say it is a buy. The stock is undervalued. Let's go to Paolo in California. Paolo.
Hey, Cramer. Brandon Meyer. Okay, succinct and very directive. Aggressive AQST. What are your thoughts on that?
All right, I'm going to have to look up what the heck happened. Down 38%. I want to see if that's an overreaction. And then I come back with a more considered answer than I can give you right now. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, after a bullish investor day, Bausch & Lomb has its sights set on a strong year. Cramer sitting down with the company's CEO for a closer look at its future. Next.
Jim Cramer, the diehard of the dollar.
Hey, Jimmy, love the show. My 5-year-old grandson loves to watch your show.
I have to thank you for making us money when it's there to be made.
Our world is a better place with you in it.
Could 2026 be the year that eye care company Bausch & Lomb finds its footing? At the J.P. Morgan Healthcare Conference, I checked in with Brent Saunders, the chairman and CEO of Bausch & Lomb, to find out. Take a look. Brent, you're changing the world. I was not aware that there was no new innovation in contact lens for 25 years. You're changing it.
We're certainly trying. We're super excited about our new bioactive lens platform. We have it in clinical studies right now. We get data in a few months, but we think it's going to change the paradigm for contact lens wearers.
All right. Well,
no one's done it for so long. It's so exciting.
As someone who wears them, I have a chronic problem with moisture. They just get dry. Then they get stuck on my eyes. You want to fix that?
We do, and early data suggests that we did fix it. This should be the most comfortable lens. It's the first lens not made with silicone, but actually the polymer is made with hyaluronic acid, which is your eye's natural lubricant. So it works biomimetically with the eye and the homeostasis of the eye. It's really an exciting project.
I remember last year when we spoke at the conference, and I have to tell you, I was afraid that Brent Saunders was too glib because you were talking about disrupting this, and I said, oh, please, give me a break. This is a company that's involved with a heavily indebted Bausch Health. It's a caretaker thing. But no, I mean, for instance, glaucoma. The standard of care has not been nearly as good as I realized.
No, it's been a game about lowering intraocular pressure, which is a symptom of the disease. But the real disease is a neurodegenerative disease, and so we need something that helps restore vision. All glaucoma patients still lose visual function, and so we have this great asset in phase 2. We'll get data also later this year that looks like we have proof of concept. We have a phase 2 study already that shows that we could maintain IOP and improve vision, which is the holy grail for glaucoma.
Well, why don't you tell me some of the other things that you're doing that are disruptive? Because this is a company that used to be the leader, and then it kind of fell, and you're bringing it back.
Yeah, well, after 172 years of history, right, you have a lot of highs and a lot of lows. We're both familiar with some of the lows of this company, no, we have the deepest pipeline we've had in our 172-year history. We have 60 programs, many of them game changers. We have a combination program for dry eye, which really is an important way to treat that disease. We have the first ocular pain product. We have a new contact lens material that's super exciting. We have new IOLs. We have new surgical equipment. So the next 2-3 years are going to be really robust with data and product approvals and growth.
Now, there are people, some of us don't get much sleep. And the way you can tell is that our eyes get red. Lumify is a radical change, and you're doing this Lux. Tell me about it.
Yeah, so I just used Lumify right before I stepped on set, so my eyes would look nice and white. But great product. It's been a great growth driver for us. But it needs to continuous innovation. So what we want to do is add hyaluronic acid, much like the contact lens, into the formula to give it a silky, smooth, moisturizing feeling in the eye. So not just get that great whiteness, but make you feel really good too.
All right, so how do you divide between business to consumer and business to business?
You know, it's kind of merging, right?
Yes, it is.
It's not so distinct anymore. And so, you know, a lot of our retail partners or professionals recommend consumer products and vice versa. And as you think about new advertising, right, it's not traditional linear TV like it used to be. It's really, we're using AI and we're creating content and things are moving at lightning speed. So I think it's disruptive. I don't think there's a clear line anymore. Yeah.
Now, you've also disrupted industries by saying, you know what, I'm going to go with whatever is right for shareholders. I'm not going to entrench. You are a deal person who works for the shareholder. There was a story about activist Jan pushing big contact lens combination, Cooper and Bausch & Lomb. I expected to see you to say, well, listen, it's not the right time for us. You are open to do the right thing for shareholders, which may mean I want to make a lot of money for people instantly rather than multiple years. Yeah, certainly that's my true north, right? We run the company for our shareholders' benefit, right? But we think a little longer term sometimes. And look, Jan, I looked at their argument. It makes some sense, but we don't team up with activists either. So, I tend to only do friendly deals and deals where value can be created through good relationships and keeping employees motivated. But isn't it time that this industry consolidated? There are too many players. There are too many players, and on the merits, it makes sense for number 3 and number 4 to combine because there's a lot of big players. There's a lot of local players all over the world, and I think it would be good for consumers. One last question. When I look at the ownership structure, and I look at how troubled Bausch Health is, how do you make it so that you can distinguish yourself as being a great growth company in light of the fact that the structure of ownership is, let's just say, challenging? Yeah, so I'd focus on our performance, right? We just had an investor day. We gave a 3-year plan. We're talking about being the fastest growing eye company in the industry, which we've been doing for the last 2 years. We talked about massive margin improvement, a 600 basis point margin improvement over the next 3 years, and evenly spread out, 200, 200, 200, so not a hockey stick. Right. We have the plans, we're executing, and then drive innovation, have the best pipeline with the best products. Well, and then the rest should take care of itself. Well, this is the JP Morgan Healthcare Conference. There's a lot of news here. What you say to me sounds like that the numbers for Bausch & Lomb are too low. Well, we had a lot of momentum going into the third quarter. Right. You're a seasoned practitioner. Yeah. Are the estimates too low? Well, I think the numbers we gave just 6 weeks ago at the New York Stock Exchange are the numbers. And so there are some analysts that are below that, and they should... Well, they're wrong. Or they should come to our numbers, because I'm very confident we'll deliver them. Well, let's leave it at that. Brent Saunders, who is a moneymaker for multiple years and is also chairman and CEO of Bausch & Lomb. Brent, thank you so much. Thank you, Jim. All right, appreciate it. I like to say there's always a bull market somewhere, and I promise to try to find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow with more from the JP Morgan Healthcare Conference.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC or its parent company or affiliates and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.